Hello, hello. Hello, everybody. It's Big Chads. I'm really happy to be coming to you live here. It's a Monday, March 7th, 2022. Just want to make sure everybody can hear me okay. If you'll just give me a shout out there in the chat room, we'll make sure everything is going okay. Once again, folks, let me know where you're coming from in the world. It's a worldwide phenomenon. I love doing these videos. I get to reach out and see. We have folks from all over the world, Southern Patagonia, people from India, people all over the place. That's what we're doing. What's up? Hello from Switzerland, Arizona. Folks, we're really happy to have you here. We also have a lot of folks from the Bitcoin Live community. That's our family. Really want to say a deep, heartfelt thank you to each of you for coming as well. This is part of the long form interview series. I started this, a few months ago, and I like having the opportunity to bring on some really smart minds, some people who know this space and maybe know the space better than I do, or know different things about the space. And I'd like to have this kind of unscripted and open, honest conversation with those folks. And that's what it's all about. And continuing that tradition of great guests, we have Bob Loukas today. Bob is just an unbelievable trader, market analyst. And so I'll let him kind of explain to you a little bit more later about what he does. But if you go to his Twitter page, you click on that link here. It looks like there's kind of a master link to a lot of the stuff he does. He's doing a lot of different things. He's also on YouTube. If you go to Bob Loukas, he's got the 4-year cycle and 4-year journey. Some great videos that have been really well received by the field. So I'll encourage you to check that out. I'll also put links in the video description as well. Everybody says, okay, sounds perfect. Excellent. I appreciate that. Hey, folks, I appreciate all that positive feedback in the chat room. It's unlikely I'll be able to see all your messages and reply to them. I'm not ignoring you. I want you to know I see them, and I definitely appreciate that. Just as a quick reminder, I am on Twitter at Big Chads, academic observations about price, trading psychology, risk management. Of course, you can find me on YouTube. Please do go ahead and check out. Please do hit like and subscribe. If you're just getting started, go to the tutorials playlist. I have some great tutorials I've done for you to kind of introduce the chart basics. That will really help you understand everything else I'm doing when you're ready to kind of graduate from there. Check out the quick market updates. And of course, these are the long form interviews. Really have a wonderful group of them. And I'm really excited for today's guest. Of course, as I just said, as a reminder, I am the author of Trading Wisdom, 50 Lessons Every Trader Should Know. It's available on Amazon. The feedback's been unbelievable. I really appreciate that. If you can't afford the book, or you just don't want to buy it, totally understand. Free version on my YouTube. I have 12 of 50 lessons. Eventually, I will have the whole of the book out there for you for free. And of course, I'm a founding analyst at Bitcoin Live, the best in-class educational platform for crypto. It's something I'm incredibly proud of. We have a wonderful team, and look at that. Bob Loukas is part of that team. So we're going to get right into that. I'll give you about 2 minutes here on Bitcoin, and then I really want to hear from our guest. I continue to maintain we're in a risk-off environment, certainly below that key level, that 40K level. And you want to think about when you have a bottoming pattern that tries to form, when it fails, that's a warning sign. We had that with the failed head and shoulders here, the invalidation of the right shoulder. We had a bounce right into that supply, right where the price is rejecting here at 46K, right? That's the key level. I'm not going to go into this too much, but I did do a live stream earlier this week. Actually, that was about 5 or 6 days ago. Definitely check it out. I really kind of get into detail about how we got here. I will just say quickly, we're in a environment where support is not well defined, but resistance is. And you want to structure your trades based on the most clearly defined levels. So we need to get above 46K to have any kind of bullish momentum. In the meantime, we're looking for a spring, which is where you have a low, you violate it, and you recapture it. We did that here January 24th. We did that here February 24th. We're heading back towards those lows. It's a little bit of a risky environment. So for now, the support is not well defined. I think you have to wait for a spring. But you didn't really come here to talk to me. You came here to listen to my good man, Bob Loukas. How are you doing?
Big Cheds, how's it going?
I'm doing really well. I'm really happy to hear your voice.
Thank you. Is there a lot of echo in this room?
It's minimal.
Okay.
So, Bob, why don't you tell us a little bit? And first of all, thank you. I really appreciate you taking the time. Tell us a little bit how you got into these markets, and really how people can learn more about you. Actually, first, I showed some links, but if you can talk about that.
I only came here to see you dance, and I didn't realize we were going to talk about things as well.
Right. Well, dance class first, and then chart class later.
All right. The moves can use a little bit of work, but they're not too bad.
You're right. You're not wrong there.
All right. I mean, where do you start? How far back do you want to go? Look, I'll be 50 this year, and the term "it goes by quickly" is probably the truest thing I've heard in my life. It seems like yesterday that I was, I guess, a teenager, late teenager, a lot like probably many of your listeners, not necessarily teenagers, but perhaps in their 20s. And, .com was the rage at that point. And everything was exciting and everything was speculative. The whole world was changing. And I don't think it's very different to what we're going through today in crypto and how attractive those markets were. So certainly, as a young guy who liked to place a bet, so to speak, I didn't mind going to the casino or even the track as a young guy. And first to admit that the attraction really was from the beginning, just the excitement of it all, the thrill that you get on a trade. It really is the same thing as placing a bet, I think, for a lot of people. So it was a natural move into trading in the markets. And, I think I paid for a lot of my tuition at that time. And I think like a lot of people in 2017, the equivalent, I made a lot of money as a pretty young guy and lost all of it, and had margin debt and credit card debt as a result. So yeah, I definitely had a good time, but walked out of that experience thinking, geez, what the hell happened? That was quick. But I think it's just been an evolution since then. It's just been a process of getting deeper and learning as you go along, learning from your mistakes, and then just finding sort of strategies and techniques that resonate more with you as a trader, and starting to pick up on them and really start to follow and develop those disciplines. Is kind of the progression. I think it's a natural progression for everybody, and a path that most need to follow, I think, to become successful. The key question is, how much time does it take? Are you making these mistakes consistently and continuously, or you're learning from them? Because the evolution to successful trading and investing has to follow, I think, some form of that. And so the key is not necessarily to lose confidence. It's really just to realize that, hey, I learned from that. That was a lesson. The key is not to suffer, at least not as much as possible, not to suffer the same type of mistakes 2, 3, or 4 times. So go ahead. So
that's interesting, and thank you for sharing that. And I think you really well describe the journey a lot of people go through as they approach it as a hobby and casually, and from that thrill, and we get wrecked a few times. And so I think it's helpful to hear from someone like you, who's kind of climbed the hill, or some hills at least, that you went through that. I wonder, what were some of those earlier things that you really found yourself repeating over and over again, and you really couldn't figure out why you were doing them, or what were some of the really big early problems that you found in your own trading journey that you've now overcome?
Well, it's really every facet of trading, right? From identification of an opportunity or an idea, from executing that idea, from sizing an idea, to managing an idea once in the position, and then the psychology of all that sort of wrapped around. So I think you make mistakes across the board, and you will continue to make mistakes, I think, until the day you hang them up and decide to walk away. There is no such thing as being mistake proof. It's just a matter of minimizing as much as possible. but I think the biggest lessons overall have been, and I think you've been getting a lot more into this lately, from what I can tell. It's really around the psychology of trading and the understanding of self and the role that you play in the overall outcome of your success. I do meet a lot of people that have some phenomenal ideas and some great charts, but I think when you uncover it, they still struggle because they're right often, but the result is not right, because it's not just about, say, for example, the identification of something. It's everything. That's one component of it only. So I think the biggest piece, I think for me, has been getting to kind of a spiritual awareness, not to sound too Zen-like, but getting to a point where it's almost, again, it's almost like in the Matrix, where he kind of like finally figures it out, and everything just slows down. It's kind of getting to the point where everything can slow down, and you kind of remove yourself from the thrill and the action as much as possible, and you start making a lot of the decisions, kind of with that in mind, and just the visual and the clarity that you get from that approach.
So how do you maintain that level? I mean, you're talking about, a level of performance that you can't just, step into. You've built up to a point where you're able to be aware of yourself. And how do you kind of maintain that, right? Is it discipline with healthy diet? Is it continuing to study and read textbooks? What is it? How do you kind of stay in that mode, Bob?
It's really two things. One is the gambler's addiction to trading, and I think most people are not honest with themselves in realizing that they have a problem. And I speak bluntly, and I think you know this already.
Yeah.
I say it the way I see it, because I've been through it. I think, I would say more than half, easily, of the people who trade are really in it because of the thrill, and it's an addiction. And some of them will do well. Some who are have a very natural talent at spotting and picking the right charts, the right ideas, but they're very, very few percent of the overall group. So the very first thing is transitioning from the addict to the professional. And this isn't a joke. It's you're dealing with hard-earned capital that you've worked for or your family's worked for. And I think a lot of people take the attitude of, well, screw it, I got to be in it to win it, kind of thing. And that's really a gambler's attitude. It's just throwing stuff against the wall and hoping they kind of stick, without really having a strategy behind it. So I think it's getting through to that point where you start to say, I've got to be serious about this. Otherwise, I might as well put this in a long-term index fund, and it should do relatively well,
Right?
Because that will outperform most of the people who call themselves traders. So I think you just have to be honest. You just have to get to the point and say, yeah, I'm doing this for the wrong reasons, or I have the right intentions, but I'm not acting with those right intentions in mind. I'm really doing this for the thrill. And then, you touched on other things. I think your personal self, in terms of, health, like you said, and spirituality, I think those are important, but I don't think they necessarily are the game changer. I think the biggest one is the transition to treating this like a profession, and realizing that there are some really hot, sharp teams and groups out there who will just eat you alive. And they are, for the most part. So I think you have to get to that point as much as possible. And then you have to start focusing in on what it is you're good at. What parts of the market do you see and what don't you see well, and avoid everything. You don't have to be in everything, right? You don't have to bet on everything. It's like the guy at the casino who's at a blackjack table, and the dealer's shuffling the cards, and there's a 3-minute pause in the shuffle, and they have to get up and run to a roulette table to place a bet. It's kind of that attitude that traders will take. So they have to always be on something and doing something. And those are very low quality bets without a strategy, without a plan, and they will wreck somebody. So you just have to get to the point where you're professional. You have a goal, you have a strategy, You identify what works best for you, and what works best for you is not what works best for me. And there are many elements that just don't work well for me. And I've learned to, for the most part at least, and again, nobody's perfect, but I've learned to kind of just avoid that as much as possible and stay in my lane and work with what I think I have somewhat of an edge on.
Yeah, it leads me, and really thank you for that. That leads me into my next question. You talked about, the need to feel to be in something all the time. And I think that's a great analogy. You're waiting for the black deck dealer to shuffle and you want to run over and, play the slot. I understand you follow and watch many markets. I know you definitely metals. I've seen all your tweets about gold, and perhaps we can talk about metals in a little bit later. How are you choosing, with kind of an understanding of all those different markets? How are you choosing really what market to play? I'd be interested to hear about that.
Again, it goes down to what works best. And, with my strategy and trading cycles, I've just followed different asset classes throughout the years, and certain asset classes respond well to that cycle theory and some don't. And I've just learned through trial and error and through losses and, through that process to avoid certain markets and to trade certain markets that work well for me. And, that goes again towards the idea of trading what you know best. Certain markets behave with certain characteristics that different people can see differently. And you'll hear many good traders say this, that they trade a certain asset or a certain symbol really well, and others they can't or they don't. Because it just doesn't, there's just a disconnect, right? And there are certain assets like gold, I personally feel as if I could almost feel the tape in many ways sometimes, so I could feel the movement and I have seen the patterns evolve over the years, and I feel like I have an edge. All right, I'm not, again, nobody's perfect, but there's an edge there, and so I try to gravitate more towards where I think there's an edge.
I think it makes a lot of sense, and I think that speaks to what I've talked about. You want to play what you know, and you get that muscle memory, and so it's good to hear that you have that kind of muscle memory with gold. And it should, the newer trade and other things, I assume, but it should let newer traders know that if you do put in enough time, you'll and focus on something, you'll improve your edge on that. So I'm interested to hear. We haven't got to that yet, but how did you get into crypto? If you don't mind just giving us, or how what was your experience learning about crypto?
Well, let me think. I have a tech background. I did quite a few years in fintech.
Okay.
So I did a computer science degree back in, I guess, the early 90s. Okay. So, I've always tinkered and developed, at least back in the days, not so much anymore. So there was a natural kind of understanding, I guess, even though to be honest with you, I was quite a bit skeptical in the beginning of Bitcoin. I kind of thought it was just a Ponzi in 2013, 14. It wasn't until sort of 15 that I thought, this is great, and kind of missed the bottom there and didn't really get in until 16. So yeah, again, and then also I have this sort of libertarian gold kind of streak in me. I'm not a diehard by any means, but I do have, I think, some sort of libertarian leanings, which I think the sort of self-sovereign aspect of Bitcoin, the decentralized aspects of Bitcoin really are attractive to me. So I like those. And I'm a firm believer in it, and for the technology and what it can mean to us as a society, as a humanity. So I definitely find it exciting, and I love tinkering. I build nodes on myself. I love to stake, and I love to play around with some of the other technologies that are out there. So I think it's just something I enjoy doing.
Yeah, I wanted to ask you, are you still mining? What are you doing with that? You said building nodes, you're mining, is that right?
No, I was mining Ethereum back in the days on the GPU, but nothing in terms of mining. Just the node, Bitcoin nodes using the Raspberry Pi kind of devices, and then sort of staking Ethereum, things like that.
So, towards the end, are you able to share screen later? I'd love to hear you kind of just walk us a little bit through the price action. I know I didn't ask you ahead of time, but just to prepare you for that if possible later.
Yeah, I could probably do that.
So, I've enjoyed watching your tweets about, following your tweets on NFTs. I know you've kind of had a little bit of a journey there. you want to kind of, tell us some of your thoughts and where you think we are and maybe where we're going with that?
Oh, I mean, NFTs are very deep, and on the surface they don't seem deep, but we're in iteration one of NFTs, and I'm excited by a lot of what's out there. But at the same time, like a lot of things in crypto or any real innovation, there's a lot of speculation there. And right now, it's kind of reached or has reached or about to reach kind of that fever peak in many ways. There's obviously a significant amount of junk out there designed to trade like tokens. They're really just tokens. A lot of them are. Okay, there's obviously utility-based NFTs, which have value in the utility itself, and then there's pure art sort of based NFTs, which have value, which is a lot more subjective. But then there's a lot of junk out there, which is just another form of ICOs and trading tokens, as far as I'm concerned. So I think this market's going to go through a washout in general, and quality will remain at the end of that. And there will be, with smart contracts continuously evolving and adding utility with NFTs, it's exciting to see possibly where this goes in the future. So I've been fiddling around with them. I didn't get in early, but I certainly didn't anywhere near getting late. That's for sure. So it's been a good experience. Again, it's mostly just like to get involved and like to understand. If I'm going to invest in something, and I use the word invest a little lightly here. If I'm going to trade in something, right, I kind of want to know what it's about. Certainly won't be an expert in it, but I want to know the players involved, their motivations, the technology, the capabilities. And I think that gives me a chance at least to make some informed decisions on where I put my capital. But and some of it was speculative as well. Some of it was, again, going back to sort of that gamblers thing. That's not something that ever goes away. So there's always, even for me now at 50, there's always this fluctuation over time where I just feel like I need to kind of get a little speculative and have a little bet here and there. But again, it's with a very small amount of funds overall. There's really no risk of being hurt personally doing it.
When you're looking to speculate, what are you doing? Are you doing altcoins, or are you trying to, buy low, sell high in some of these NFTs? What are you doing there when you're speculating?
Basically what you just said. You're buying. It's just you're finding. I mean, the good thing the thing with NFTs is it's such a human-driven market because it's so social. It's so driven by people and sentiment and Discord groups and influencers as well, unfortunately. So it does involve a lot of time, and that's the reason why I've kind of pulled back quite a bit the last 3 or 4 months. It's just taken too much time to really play that game. But yeah, I've kept a couple of NFTs I like that I think I want to hold more for the longer term, and just involved here and there for the most part, but just really just paying attention from the sidelines a little bit more now, just to see where this all goes.
I think that'd be a good segue into some of the market analysis. I'd love for you to maybe, for people who aren't familiar, talk a little bit about what cycle theory is. And then maybe, if you don't mind, show us your chart and maybe how, talk a little bit how we got here the last 2 or 3 months of Bitcoin, and then kind of where you think we are now, like that.
Okay. How do I share my screen on this?
Let's see, middle next to settings. There's a gear on the bottom there, bottom middle.
Oh, I see. Yep. All right. Tell me when you see my screen.
Okay.
Oh, hang on.
There we go. I'm going to add you to the stream, my friend. All right. Thank you, sir.
All right. So what do you want to know first? You want to talk markets? You want to talk cycles?
Yeah. Why don't you, if you don't mind, just give us an intro to kind of cycles, and then, last 3 months of Bitcoin, kind of how we got here.
Yeah. I mean, the idea of cycles really is tracking price action, which is tracking sentiment around an asset class. In general, cycles are just a sequence, right? It's a sequence of events that repeats. And we find that most asset classes, or all asset classes, have these repeatable cycles from trough to a peak to trough. And this really forms over time in any asset class. It's really just the ecosystem evolving. And as people join, they kind of join that ecosystem, and they form this culture. And price action just represents human sentiment, right? How many people want to buy it or sell it at any given time, and if obviously if more people want to be buying at a certain time, and sentiment is running positive and bullish, then in general you'll see price action or price move to the upside. And then the same in reverse. In a decline, you'll start to see more sellers, fewer buyers willing to step in at certain prices, and you'll start to see declines. So these cycles simply just represent the collective participants in any market. So these arrows simply represent the cycles. There are cycles on various time frames. So there'll be a cycle, as some of your listeners will probably know, on the sort of the 4-year time frame, which is this long secular cycle that is more driven by longer term capital, longer term focused investors. But then within that, you'll see other cycles, like a 9-month cycle or a 60-day cycle, and those are shorter, obviously, in duration and shorter in time frames. So these green arrows represent the low of a cycle in the 60-day time frame, and then the red represents the top of the cycle. So you'll see in a rising market, the top of the cycle occurs pretty far into the cycle, not too far from the low. And we call this a right translated cycle, simply because there is more time in the cycle where it's rising and less time declining. And you'll see almost all trends to the upside will have these right translated cycles. And you'll see this back, obviously, in 2020 when we ran up. So you have kind of like 8-9 weeks to the upside, 1 or 2 weeks down. Same thing here, 7, 8, and then a couple down. In a left translated or a declining structure, like we've seen here more recently, what ends up happening is when the low forms, the market struggles to bounce up. And that's simply a reflection of sentiment. Far more sellers willing to come in and take a lower price to get out of the market or to push or sell, and fewer buyers willing to come in. So what ends up happening is, out of a low, so there's some selling, some capitulation, the rally or the move out of that cycle low is fairly sort of subdued, as you can see, and then the market spends more time rolling over. So you'll see that all the way through, in a declining phase, again, fewer weeks rising, more weeks declining, and that's how you get the decline in the cycle. So what we try and do in cycle theory is we try to understand where the market's trending and where sentiment lies. And once we know where the trend is going, we tend to see multiple cycles kind of repeat and look very similar. So once you start to see a trend evolve and you start to see right translated cycles, there's a pretty good chance that that trend will continue, will start to stay above a moving average, and will start to rise. So the idea is then to obviously buy as close as possible to a cycle low. And then when the market gets stretched, you can look at a Bollinger Band, so you ride the upper Bollinger Band. And then when you start to really peak above that, and you're in the timing band for a cycle high, then you can start to possibly look to trim or exit and repeat the process. And the same thing coming down, right? But just the opposite. You're looking more on the short side, and you see the same process where we start to move below the moving averages. We start hit lower Bollinger Bands. And then when you start to take out some of those lower Bollinger Bands in the timing band, there's a good chance that the market's going to start to jump in a new cycle. But because you're in a downtrend and you start to think, well, the last 2 cycles were in a downtrend, there's a very good chance the next one will also continue in that manner. So that kind of segue into where the market is right now. Again, nobody ever knows with any significant accuracy where the markets are going, right? We try and identify possibilities that make a lot of sense, and we formulate strategies around those possibilities. And then we are quick to acknowledge that the primary possibility that we thought had the most chance is not unfolding, and we quickly have a plan for that to reverse our actions. But the way it stands right now, simply and unfortunately, we're in this downtrend since the highs back here in November, which was a double top. Yeah. I think many of you know that I was thinking that we would come up here and we'll shoot up and go up towards 100 to 200,000. We haven't done that, obviously, and now we're locked in this declining structure. So we're declining. We haven't taken out the January lows just yet, but we're kind of getting deep in this cycle. Here's a daily chart, and this is the daily chart of the 60-day cycle. So we formed this low back here in January. We spent 18 days coming up to a high. Then we came down into what we call the mid-cycle point. So this is around the 30-day mark, the middle of this low to the expected next low. Typically into the mid-low, you get a bounce. And this is where there was a couple of paths that the market could have taken. It could have gone up and made a higher high, which would have been a right translated cycle. And that would have been a fairly bullish development, or at least an indication that the decline from the November highs was over.
Right.
But we didn't get that, right? We fell short right there and we came back down. And this is what I was looking at. This was the fear that we didn't come up. And we've broken down. And now really just being honest with the trend and just following the trend, you'd have to think that at some point we'll lose these mid-cycle low area, sort of 36,000 area, continue down to test the $34,000 range, which was the cycle low, break below that. And then when you kind of zoom out, then you look, well, let's go to the weekly. Then you start to look at this level here at the 30,000, 28 to 32,000 area, which has been the bottom of a number of cycles. And then you hope that that provides the necessary support to form the cycle low in March, and we can bounce out of that. And then if we bounce out of that, again, we hope we don't roll over one more time in the next cycle and continue to trend lower. We hope that that forms enough support where we stay in this range, at least for now, and hopefully make a move back up towards the top of that range. And then from then, we can start to maybe get a little more hopeful to think that possibly we can break to the upside and go to all-time highs. But that's just, that's too far ahead in the future right now to worry about that. We have to worry about what we have in front of us. And again, like I said, this is kind of the primary view. The bullish view now is that we can kind of stay sideways and hold this 34,000 kind of level. And come into maybe just grind sideways for the most part and completely decouple from a declining equity market, form a cycle low in this March timeframe, maybe something similar to what we saw back here in July,
right?
Where we kind of just we made a lower low, of course, but it just barely, and held that level and then just shot up quickly, and within kind of 60 days, we're at the top of the range again. So we're hoping that can kind of form right here. So this is where we're at right now, definitely in a defensive position. I think anything below this 46,000 level right here is defense only. I don't see a need to get any real FOMO with any sort of $2,000, $3,000, $4,000, $5,000 move at this point. I think that's just counter trending to the intermediate decline that we're seeing. And I think those opportunities, and that's what as I was saying to members of Bitcoin Live, when we came back up here to 44, that's the time to start to say, how are you positioned? Are you leveraged? Are you overexposed? Because that's a good place to possibly trim or get back into a more balanced position where you can sleep comfortably at night, because it's a chance we do roll over into the lower levels, and you don't want the market forcing you to make decisions at the wrong time. You want to make your decisions when at least they're more favorable to you. So this is really, it's unfortunate, but that's just the reality. We have to be honest with the reality and the price action, and this is where it's pointing to right now. So again, hopefully the blue path unfolds, but even the red path, if we can get a flush out down and maybe make a new low, take out the July lows, take out the January 21 lows, and kind of V-shape out of that. It may not be the worst outcome after all, if you can survive through that, and obviously not capitulate at that bottom. But you need to be sized correctly here to avoid having to be forced to make decisions like that in the future.
So are you just continuing to kind of add to your HODL DCA, or did you make it, and you don't have to discuss this if you don't want, but did you make a decision kind of, November, when it started to break down, that you kind of trimmed any long-term positions? How are you handling that, kind of what we're doing?
Mostly underweight across the board. And there really isn't any adding to be done here as far as I'm concerned.
Yeah.
We need to get back above 46 to look at the cycles and say to ourselves, what's going on? That's really out of character. And then look to add above this sort of $47,000 level. Otherwise, really looking for this March timeframe cycle low around March 20th to 24th for possibly going back to sort of a core position or maybe even an overweight position. And it's going to really be dictated by how the market really unfolds in this level. But even a big move down to say 26 to take out all those prior support levels and prior cycle lows. If we can form a low and then reverse, and it's clear that the cycle low is in, it could be an opportunity to kind of get back into a pretty sizable position, because then that low forms a stopping point, right? So if we come down, form a low, and then shoot up, at least you have a level where you can kind of put your defenses in and get back out, or go back to underweight, or go back to a neutral, or even a short position overall. And this is where I use cycles predominantly, is these lows are kind of like checkpoints, and they're important checkpoints. So a lot of the trading decisions are based on those lows. So if we form a low there and come back up, I'd be very inclined to buy that dip, but then respectful of the lows that formed, because we shouldn't be taking those out in a rising market. In a declining market, you're taking out the lows. As you can see, here's a cycle low, and you took it out. Here's a cycle low, haven't taken it out just yet. So you don't want to be seeing lows, prior cycle lows taken out, because that is just the definition of a decline, of a downtrend in the cycle theory. So we want to be out in those cases.
So I've seen a lot of people talking about March, and so is it hopefully going to correspond with maybe a settling down of the macro picture? Is that kind of just I've seen you say that with a lot of confidence. It's interesting to me because, like, how could one know 3 weeks out? But a lot of smart people are kind of saying a similar thing. Is it just because the timing of the cycles, or is it also maybe a thesis with the macro as well?
It's mostly just timing of the cycles. And you have to be honest with them; they're not perfect. Once you start believing, that your strategy is sort of foolproof, then you're going to be in for a lot of trouble. Cycles, they kind of come in a range. There's a timing band. They can come as early as sort of 50 days, 52 days, as far as 70 days. So you're kind of mixing it a little bit with other technical indicators. You're looking at, sort of the price action. Do you have a washout, for example? And then you're looking for kind of a reversal. You're looking for a swing to occur. So you have to be patient with it. But generally, markets respect cycles for the most part. Certainly in an uptrend, they do. So in a rising market, they are just extremely. They're definitely a good tool to have in sort of the bag. In a bear market decline, the surprises can really get out of hand at times. So you have to be very careful in a declining market. But yeah, in general, they kind of just rhyme on these cycles. And these are just sentiment driven, right? You can overlay a sentiment sort of percent chart on this, and they pretty much generally align fairly well. And of course, like I said earlier on, sentiment, price action, they're very much related and correlated.
So are you looking for like a 90% down volume day, that type of thing? Or is it just if it happens, that's great, but if not,
Yeah, I mean, not all cycles will end that way. Like, for example, this one here, I think really had the capitulating nature of that, but I think it was more of a retest, and you had that capitulation in the cycle before that. So I think this was just a case of just sellers drying up, and the market pushed up, and then also the expectation that you would get that decline. So there's probably a huge amount of short interest that built up. They had to cover their positions. So no, it's not always the case, but whenever you do see a significant capitulation in the timing band for a cycle low, it adds to sort of that confirmation that you want to see, because often a cycle will end that way on some pretty significant volume. But also, I use Twitter a lot, not so much also for getting the message out, or my message, but also to get a feel for what people are thinking. I mean, I look at the replies a lot, and I comment a lot, because it actually gives me a read on what people are thinking, and so I'll use a lot of sentiment's a huge part of kind of my thesis in sort of structuring a trade or my view on what the market's doing.
I think that's smart. I think it's really smart. Bob, before we, this is a quick question from one of the viewers. Please ask Bob where we can learn more about cycle theory and trading it. Any easy links or?
J.M. Hurst, Profit Cycles is probably the best book. Walter Brissett as well is some resources online. You'll have to Google Brissett.
Okay.
Those two are pretty much my main influences.
And thank you for answering that question. Just last on Bitcoin real quick, you mentioned, in the downtrend, we get surprised, in this type of a corrective environment. Is there a level that would really kind of, freak you out? I know we've never crossed over the prior all-time high, so if we broke below 20K, would you start to rethink, a lot of stuff, or would it depend how we get there? Can you talk about that a little bit?
Yeah, it's a good question. I mean, we have to appreciate, look at March 2020.
Yeah.
We have to appreciate the volatility that comes with this space. We keep hearing about volatility is going to come down as institutions come in, but we haven't, I don't think we've seen that yet. If anything, we've seen probably more 30+% declines in the last kind of year, maybe than we've seen throughout the last 10 years. So it's up there at least. So the volatility is definitely there, and Bitcoin is just one of those asset classes. If you're not respectful of its possibility, and its possibilities are endless, really, then you're not going to do well. If you don't have a plan for that, you're not going to do well. In terms of, does a certain price level impact sort of the viability of Bitcoin? I don't think so.
Okay.
I don't think so. I think it's on a trajectory personally. And I think that trajectory over time is up. But again, the path to get there, and the 4-year cycle is a classic example of that. We looked at prior cycles and the 4-year cycles, and we had a reasonable path laid out towards a certain level. And we got rejected back up here in November. So we have to adapt, and that happens in investing and trading. It happens in every asset class. It doesn't always work out the way you think it's going to work out. Even if you're very confident, there's always a possibility that it won't go the way you expect. And you just have to make sure that the bias that you carry is not one that's going to handicap you from making decisions that when you need to make them. And I think that's very important.
All right, I think it makes a lot of sense. I think so. I'm curious, like what's your risk appetite for altcoins right here? And I think I might know the answer, but how are you approaching altcoins given what Bitcoin's doing here?
Well, I'm a trend follower. I only really trade altcoins when the altcoin itself is trending higher versus Bitcoin in general. So right. I want to see outperformance to Bitcoin.
Right.
And we haven't seen any of that. And Bitcoin's been down, of course. So obviously versus USD, they're getting slaughtered. So no, I haven't really placed. I think I've maybe done one or two trades in the last 3 or 4 months.
Wow.
Whereas, back here in December of sort of 2020, and basically this whole move up, I was probably doing 1 or 2 a week. So I think it goes back to, do you have to be in the market? Do you have to be trading? And if it's just not right, if it doesn't fit kind of my strategy, then there's nothing for me to do. And I just haven't seen a chart that I like. I go through around 50 or 60 on my watch list. And there's been a couple. I think Luna, AVAX, for example, I think some of those names kind of come to mind recently that have probably done okay. And there's been some trades there. But otherwise, most of them have just been looking sick and not trending in the right direction. Obviously, there are short candidates right there, but that's a different discipline that I think takes a little more experience. I don't like to share a lot of things on the short side.
All right. Well, that's wonderful, Bob. It's just been great to get you here, to really kind of stretch out some of these ideas. If folks don't know, you are founding analyst, and you are the reason I'm here at Bitcoin Live. So I want to say thank you for that. Do you want to really just tell us a little bit what your vision was for Bitcoin Live, why you started it? I'm curious to hear a little bit about that.
Yeah, I've been writing a letter on the equity side for 10 years now. This is the 10th anniversary, writing about gold markets, equity markets, for a little bit of forex as well. So it was just a natural progression. I mean, back, I think it was in the 2000s, I was involved in a lot of online forums, sort of before Discord, obviously.
Yeah.
And I was very active and contributing a lot. And I think a lot of people kind of reached out and said, hey, what do you think about this? What do you think about that? So I just started putting letters together, and most of that was just for my own research, just to kind of formulate ideas. And when you start talking through your ideas, you kind of, I think, get to sort of visualize or crystallize them a little bit better.
Yeah.
So I was just writing these reports, and then I just started sharing them with some people, and it kind of just grew very organically. And before I knew it, I had a list of thousands of people who were receiving this sort of PDF that I was generating. Built a website and started just doing the same thing, just recording my ideas and just sharing those ideas. And I kind of thought, well, I'm in crypto now, I'm in Bitcoin. It's kind of a place where I think there are a lot of new entrants in the market that don't have any prior experience. And again, they're attracted to the gains and the noise that's coming out of the space. And I just felt that it would be something a lot of people would benefit from and enjoy reading, and hopefully it's been a good experience for many of them. It's not for everybody, of course, but yeah, it's more of a guide and more of just a data dump in many ways of just my thought process and how I approach and view the markets. It's really not designed to make anybody rich. Right, it's not one of those type of groups,
Right.
as you know. Right, we're there to basically just share our knowledge as best as possible, and hopefully, it's designed for people to become self-sufficient and to learn their strategy and to take some of those strategies along with them, and formulate their own plans and process and get better for themselves.
I think it's wonderful. I've said it before, but definitely want to say thank you for the opportunity.
You're welcome. Good to have you.
Yeah, I'm just proud of it. I think we've got a great team. So, is there anything you want to leave our viewers with, perhaps some words of encouragement, for some of the folks who are struggling, anything like that before we go?
No, I'm happy to take some questions. I've got a little bit of time if you want.
All right.
Yeah.
Yeah, folks, fire off the questions. There were some few. I'm going to scroll back in the chat room. There's a couple of questions with cycles. So let's see here. Let's see what's going on here, folks. Someone had asked about, folks, fire off the questions for Bob Loukas. Here we go. Any thoughts on an alt cycle this summer?
I'm really not the one for alt cycles, but in general, from my experience with, say, trading precious metals, the more speculative aspect of a market typically doesn't really run until there's more of a confirmed bull market in the primary asset class, or the primary asset in the class. So until I think we see a real change in sort of Bitcoin's character, and we start looking for a bull market there, I don't think you can expect an alt season. Again, I've never really taken huge advantage of alt seasons. It's just on the fringe, too much on the fringe for me.
Yeah.
But I don't think it would be wise, given what we're seeing here, to expect an alt season in general. Doesn't make sense that we would see one. Of
this
course,
summer.
Well, again, it's going to depend on kind of how we respond here in March. Does March put in an end to this decline? Can we then make a run to the top of the range? If we do that, then obviously there'll be some period there where maybe an 10 week period where altcoins go on a good run. But I don't have the answer. I really don't.
What? I was told, Bob. We have a question, Bob. Let's see. How do cycles differ from asset to asset? Let's say gold versus Bitcoin.
Well, mostly durations are a little different. Different durations, and we don't know exactly why the durations are different, but the trading of those come from a different sort of group of people, different type of people, in a different era as well. So they just evolve over time, and they diverge, or they don't necessarily diverge, but they just have different characteristics of a cycle. But in terms of the sentiment element of a cycle, it's all the same. You see the same move from pessimism at the trough of a cycle to extreme optimism, excessive speculation at the top of a cycle, and then repeat and rinse and repeat. The key difference, to understand is that the longer term cycle. So, if you're looking at, say, for example, a 4-year cycle. So early on, as it's rising, it's more likely that the shorter duration cycles are also going to be far more right translated. It's not until the market really tops from a longer term standpoint that you start to get more bearish shorter term cycles as well, because the shorter term cycles drive the longer term cycle drives the direction of the shorter term cycles. So you'll get in a bear market, that's why it can get worse much more than you think. And the bull market, you look at certain markets and you think, wow, this is just crazy. It just can't get any more crazy than this. And then boom, it does, right?
Yeah.
So you get the excesses, the extremes end up being far more than you expect. So I think cycles, again, just reflect that. So in the bear market, you're going to get far more pessimism for longer periods of time. So you see a lot of people post sentiment charts and they say, oh, look, it's down to like 5%. It's got to bounce. But then they're ignoring the fact that, are we in a bear or a bull market? So in the bull market, when you get these moves down in sentiment, that's a good buying opportunity, because normally you don't get negative sentiment last for a long period of time in a bull market or in a big uptrend or a big move up higher. But in the bear market, you can get 4 or 5 months of really bottom level sentiment, and you got to be careful when you read those indicators. So you have to know kind of where the long time frame or the long cycle is.
What about gold? There's some question here directly comments on the gold cycle. We didn't really, and I think it would be remiss to not ask you about gold, Bob. What you think's going on here?
Yeah, I'll pull up a chart for you. So let's look at a weekly of gold. So looking very bullish. I mean, if you zoom out here on gold, I'm on a laptop, so I don't think you're going to see this that well, but obviously this is a pretty well-known chart right now, going back to the bull market top back over a decade ago, down into the bear market, and then kind of the early awareness phase, and then the move to all-time high. It looks like we're completing the handle here in a very big cup and handle pattern. When you sort of zoom in on the weekly here, more recently from the move to all-time highs, August 2020, we had this left translation here, so down into the lows, we had a double bottom, then we came up and we didn't form another low. We didn't come back down to test these lows.
Right.
And we formed what's called a time-based cycle. There was no price decline, meaning that there was just too much buying in here, too much accumulation, not enough sellers, and the market ripped higher and took out the last 2 highs. So in theory here, we've now started a new rally, or that's actually not a rally, a new uptrend. And in theory, we're going to start to see right translated cycles that will take out the August highs here. And then my thinking is that we're in the early phase of a new secular bull market in gold. And I think here that over the next 2 to 3 or 4 years, that we're heading up for some pretty big numbers. The macro kind of lines up well, the inflation element, the deficit spending element, geopolitical risk elements, a lot of sort of macro, and the macro is difficult to time. I mean, if you lead with macro only, you're going to get hurt. But when they align like this from a cycle standpoint in the macro, I think it makes a lot of sense to me that we're going to start to see trending higher and higher prices in gold. And I think silver is also going to obviously follow along with that. So definitely a very bullish picture here on gold. It's a little stretched on the short term. It's riding the upper weekly Bollinger Bands right here, but it has momentum right here. And precious metals, commodities, when they get momentum, they're kind of like altcoins. When they get momentum, they just go. And I think we're in the early stages of one of those kind of big moves higher for precious metals.
What would the target be? Would that be kind of the size of that base from 16 to 21? So would it be like 2,600 or something?
Yeah, I think in the next sort of year or so, that's a reasonable target from a secular perspective. So you can probably look at something more towards kind of like the 6,000 to 8,000 range. Let me take a look here. Yeah, so I think you're kind of looking at prior bull markets, and they would do sort of like a 4 to 6x from the base. So getting up towards sort of that 6,000 level.
Wow.
I think here I've actually already drawn that. This is the 8-year cycle of gold. So I think we get this move up, just like you said here. Here's around 2,600.
Yeah.
And it's sort of my target, kind of by next year at some point. Then I think you get this pullback into what's the 8-year cycle low, and then I think you get this continuation move up, and this is the main thrust of sort of a secular bull market up towards sort of a late decade high, and it's really anybody's guess. I really don't like throwing up price too much. I think it's more about the time, but that's kind of my view here on precious metals. Certainly positioned for it, and we'll see how it goes.
Do you have a gold plated toilet? All that stuff?
No, I don't.
Okay.
I don't.
Bob, we had a question macro. I don't know if you not mind answering, but Paul, who's a viewer, asks thoughts on if a recession is coming.
Well, I think it's certainly it's growing by the day. The possibility is growing by the day when you look at sort of the events that are unfolding, and the inflation numbers that are out there. The recent action here in the Ukraine, I think, is obviously pushing up raw commodity prices significantly. That's going to have a follow-on effect. There's further supply chain implications there as well, and that's going to obviously drive up prices. So inflation's not good for the markets, and then you've got the Fed who needs to combat that and try and juggle between the two, and they're looking at obviously tapering and raising rates, which I'm not sure they'll be able to do so successfully. But yeah, I think there's a lot of reasons to be mindful of that. The 10-year curve as well, it's flattening out. So there's reasons to be very much concerned that we're going to go into a slowdown or a recession.
Yeah, well, it's the other side of the euphoria we've had for so long, isn't it? Just that potential.
Right. Yeah, I mean, the one thing is, though, the Fed has kind of found this new kind of magic bullet that they keep playing when the market gets weak or the economy gets weak. They just they accommodate more, and I think they kind of have overused that and are stuck using it right now because they just don't want to go through the necessary pain. I mean, the business cycle is just a cycle, and if you try and abort the trough, then you're aborting the cleansing elements of a cycle low or decline. In theory, recessions are healthy. They take out the excess or the capital that wasn't allocated correctly. And if you don't punish those players, then you just you're adding on. So the response out of this may be that the Fed has to double down again, and the markets keep driving higher. But of course, at some point, the bill's got to be paid, and who knows when that is, though, right? I mean, earlier on in the 2000s, I was very much, aligned with kind of the idea that the country's bankrupt, the world's bankrupt, and we're a year or two or three away from, Armageddon and complete collapse of the fiat system and all the buzzwords you hear.
Right.
I've learned that, time, respecting time, it's difficult. And, these types of environments can carry on forever. I mean, the deficit's a good example of that. I think back in the Bush era, early 2000s, the deficit was something like, what was it, 6 trillion or something? And it just seemed like it was unsustainable. And people talking about once it gets above 10, it's all over. And then before you know it, went to 15, 20, and now it's at 30. Before you know it, it's going to be at 60, right? It looks like every 8-year presidential cycle, it doubles. So this can keep going, I guess. At some point, it's going to be a problem. And I think it's going to be the type of problem that it's going to be bigger than just weathering through a 1 or 2 year recession. But I don't want to guess on what that looks like, or what the outcome is. I think there's just far too many variables to try and come up with an educated kind of guess on what that looks like. I think the most important thing from an investor's perspective is to get your house in order quickly and always have, not so much because of that potential. I think in general, just living your life with your house in order. Okay, your debt levels personally, your income streams, the type of skills that you have, the type of work that you're involved in, the type of side gigs that you're doing. I think you have to have all these things in order, and you can weather those situations. And unfortunately, I hate to say it, but you should profit from those situations as well. Profit from bad times. It's most of the best assets are sort of bought for a steal at the worst of times. And I mean, Bitcoin's a good example of that. Look at March 2020, right? If you were ready for it, or if you had your house in order and you had available capital, you could have picked it up for 3,000 or 4,000 a coin, and you're up 10x. And that's only a year, 18 months ago. But most people didn't have the house in order, and they were dumping into that because they thought it's going to be all over. Might as well get something out of it. So you just you're gonna try and want to be at least prepared and one step ahead in general, as much as possible.
I almost forgot to ask you: are you still stacking McDonald's, Bob?
I have been, yes.
Do you want to? I was looking at it today, but I was like, I wonder what Bob thinks.
It's down quite a bit. Yes, it is. But yeah.
But you've been buying it since forever, right? So, for 20 years.
Yeah, a little more than that, I think. So when my kids were born as well, I did a number of drip dividend reinvestment plans where you're buying sort of stock directly from the company. They issue the share certificate and then they reinvest the dividends. I did that for my kids, and just reinvest the dividends. Yeah, I mean, I think I can't remember what the stock was back then. It was obviously well below 100. Now it's at 240 or 250.
Yeah.
But they pay a 5-6% dividend, and then when you're buying it at $50, whatever it is, it's at 250, paying 5%. Then you can work out the yield on that. It's pretty phenomenal. I think that's a good example of just having a long-term view as well as a short-term view. So I like to. I'm sorry if I'm segueing out a little bit here on you. But I like to put my capital in buckets. So I have income streams I work on, whether it's a business or multiple businesses or investments. But then also the capital in terms of allocation. Okay, I have short-term needs. I invest in short-term opportunities. For example, fiddling with NFTs or trading on the 60-day cycle. But then I'll also put capital to work on a longer time frame, and I'll be prepared to go through drawdowns in that period because it's a defined investment. One example is Ethereum. I bought a number of, I put a number of 32E stakes in, and I put 6 stakes out there, so a couple of hundred Ethereum, and I have a 10-year horizon on that. All right, even though I can't touch it now because it's staked, but even when the Ethereum 2 chain merges and that can come out, I have a 10-year horizon on that. And my view is that if I can put that aside and hold it, it will, I have a thesis on that, and I think it would do well. And that's kind of the same thing with the McDonald's, right? There were plenty of times I could have sold it, but the yield I get on that now is phenomenal because it's compounded so many times over the 20 years. And I know a lot of listeners, maybe younger folks in their 20s, are saying, "Shit, I'm not gonna put my money in that slow ass,
dinosaur,
right?" But you know what? You'll learn to appreciate things over time. The returns that people think the market should give you, you will learn very quickly that they're not there. They're just not. Okay, you'll get lucky in a bull market, and you probably will give a lot of it back. If you're smart and you exit at the right time, great, you can do really well. But in general, I think you have to have some long-term views as well, because before you know it, life catches up. You'll be at a certain point, and it's just good to have these other buckets that have been working for you, and they can do well over time as well.
How about one more quick question, and we'll wrap here, Bob.
Sure.
Bob, let's see. Bob, do you think with gold running, will we see a super cycle for minerals?
Well, I think commodities in general have been beaten down for quite some time. If you look at some of the charts, I think we're in a phase now in this sort of decade that I think a lot of commodities are being repriced.
Right.
So definitely.
Okay.
you look at some of the raw materials. You look at copper. You look at nickel, for example. They're up quite a bit, but if you go back to 2008 and so on, it really hasn't gone up that much. So they're very cyclical. They kind of go through these 20-year cycles, and when inflation starts picking up, they generally will as well. The cost of mining is very, very expensive. So I think we're going to go through a commodity cycle. It's way overdue. When you look at ratios of commodity prices to equity prices and stuff like that, it's really, at historical kind of bottoms. So I think there will be a period coming where I think commodities and access to or exposure to commodity-based investments, a reasonable amount, is probably not a bad idea.
All right. Well, I really appreciate everything you've said. It's great to finally get you here for a conversation. I love talking to people who look at things differently or have different expertise, and you really do. So I know my viewers and anybody who's watching has enjoyed it. Is there anything you want to just leave us with before we wrap here at all?
Nothing comes to mind, to be honest with you. I mean, I think, again, just develop yourself, keep working on yourself, take it easy. And, at the end of the day, you just have to try and get to the point where, you're slowing down, you're taking better opportunities, fewer trades, few opportunities that you can see, and you have to see them through as well. I mean, I think I did write some notes here. There's one point I wanted to bring up was that, most people are pretty good at identifying an opportunity, but they're horrible at seeing it through. So what I mean by that is they'll identify a target, but then once they're in profit and it's going their way, they kind of get really antsy. They're like, hey, I've made some money on this. I was right. See, I was right.
Right.
And they find it very difficult to hold that, and they'll cut their position. So they never really reach their profit target. But unfortunately, on the downside, this is where ego and the bias comes in, where people don't want to let something go. So they're doing it really in an opposite way. They're cutting their winners far too early, but then they get caught like deer in headlight on the way down, and they suffer massive drawdown. So they're not respecting their chart and their idea of where they're invalidated, and they're really riding a position. And then once they get stuck, and I've seen you've done a few tweets on this recently, I think, but once they get caught in the drawdown, they feel that they can't get out, and they can't realize the loss, and they can't realize that they're in error. And that can be very dangerous, certainly if you've got a big position size or you're using any type of leverage. Most of the people that write into me, I get a lot of comments, I get a lot of DMs, people kind of asking for help, and generally after a pretty bad market environment. Yeah. It's kind of the same kind of theme. Oh, I got caught in this. I had too much position. I had too much. What should I do? Should I get out? And, unfortunately, it's often too late to give the right advice, because there's no real good medicine at that point. But in general, hey, don't be afraid to get out. Don't be afraid to miss an opportunity. I think people are just worried about missing the opportunity, but at the same time, they're sticking their neck out and getting caught to do that. So just be aware of that.
I love it, Bob. Well, I really appreciate you talking with us today, man. I really appreciate it. And, we'll have to talk to you again soon.
All right. Thanks very much. Appreciate everybody for listening, and all the best.
All the best to you, Bob. Thank you, sir. Wow, that was great. I've been really looking forward to that for quite a while. Bob is someone who I look up to and respect quite a bit. He's a colleague of mine at bitcoin.live, and I have a lot of great stuff to say about him. And you can see why, obviously, based on what we did here today. We went through cycle theory. We talked about his views on the market, risk management, his views on broader stuff, equities, macro, and all that stuff. I think that was just fantastic. Let me just remind you a few things about where you can find out more about our friend here, Bob. He is on Twitter at Bob Loukas. You go ahead and click on that link. That's going to take you to his landing page. Looks like he's got a link to a bunch of stuff he's doing. He is a man of many interests, so he's doing a lot of different stuff. Check that out. He's on YouTube at Bob Loukas. He has that very popular 4-year journey video series. Definitely would encourage you folks to check that out. And I'll let you know he is a founding analyst along with me at Bitcoin Live. You can sign up for either of us. You get access to all of it. It's just a wonderful platform that he started, and I'm really thankful to be part of. So folks, check that out. I am on Twitter. I'm at Big Ched's Academic Observations About Price, Trading Psychology, and Risk Management. My book is Trading Wisdom, 50 Lessons Every Trader Should Know. That is available on Amazon. The feedback's been unbelievable. I'm a little surprised it's done so well, and it's basically 5 out of 5 stars, which is awesome. So I really appreciate that. If you don't want to buy the book, you can't afford it. Like I said, you just don't want to buy it. Go to my YouTube, go to the playlists, Trading Wisdom, 50 Lessons Every Trader Should Know. I'm going to do the whole book for you for free. If you're brand new to charting, check out the tutorials, educational live streams. That will get you started. Then when you're ready, check out those quick market updates. And then here we have the long form interview series with Bob. I'll just leave you here very briefly with some basic analysis. Yeah, we're in a moment where bears have the edge, and I'll kind of echo what Bob talked about. Is bulls attempted to really regain that momentum. They attempted to kind of regain that secular or that primary bull trend. Right, we're in that secondary or corrective phase here. All right, and really to resume that larger trend, we had to flip 46K. And we've seen the price respecting that now time and again. The bottom of the failed even Eve double bottom here at 46K. We had the price flush. We had the overreaction, dip below the Bollinger Band, the spring, bounce, reject 46K. We had another upper to lower Bollinger move, and then the spring and rejected at 46K. We're in an environment where resistance is really well defined, but support is not. And that's not a great spot to go long. I can't tell you where to go long here exactly. I can't tell you really the level that needs to be tested, because there are arguably a few here. The Feb 24 low, is it the January 24 low, or is it kind of the bottom of the 80-day rectangle at 30K? I think you have to be nimble. And, for me, I'd rather buy into momentum. I'd rather buy with confirmation of a resumption of that trend, flipping back 46K, the primary resistance. So I'd kind of keep an eye on that. I'd be careful. Like, as Bob said, we're not trading a lot of alts here. So be careful with your alts. I would say if you're going to trade an altcoin, only the best of the best. Luna, the stuff that has relative strength, the stuff we talked about before. So I'm not really going to talk too much about that more today. If you want a little more information about my thoughts on the chart, check out my more recent videos. But listen, I really want to say thank you. I appreciate each and every one of you for watching the long form interview series. It is my pleasure to be able to bring forth these folks to kind of have this kind of open and unstructured conversation. And hopefully that is providing some value for you folks. I'm reading the comments in the chat room. Great stuff. Thanks to you. People are happy. I am happy. So I want to say I appreciate it. And we'll finish it off here with a little bit of dancing, and we'll take it from there. And maybe I'll do another video in the next week or so. But until later, Big Cheds is out.